Hello, everybody. My name is Kelly Higgins. I am the Executive Director for the Autism Community Connection. Thank you so much for joining us today. We have our family game night coming up on April 26th. It's going to be at the Greenwood Community Center from 6 to 8. This event is free, but registration is required. We'll have a bunch of board games, group games, individual games. You have access to Kids City. We're going to have pizza, snacks, water. We'll have a sensory space. We'll have Royal Encounters, which is cosplay. It's going to be jam-packed full of fun, as always. So again, as you can hear my daughter in the background, I apologize. But here today, I have Amy Corbin. She is the Executive Director with the Able Account INvestABLE Indiana. And she's going to talk to us today about the Able accounts. Amy, thank you so much for joining us.
Wonderful. Thank you, Kelly, for having me. And thank you all for taking time out of your day, out of your evening to either be here with us presently or watch this recording as it fits your schedule. But again, my name is Amy Corbin. I'm the Executive Director for the Indiana Able Authority, which oversees our state-sponsored Able Savings Program called INvestABLE Indiana. So hopefully, if this is your first time hearing about Able accounts, or maybe you're just here to get a refresher or learn updates about the program, I always tell people if you can walk away knowing two things about the benefits and why Able, are that all the funds in the account grow and are withdrawn tax-free as long as they're used for qualified disability expenses. And two, probably the most important benefit or significant benefit to many account owners is that all the money saved in an Able account does not count as a resource when determining an individual's eligibility for means-tested programs such as Medicaid and SSI. So Able accounts were allowed for on a federal level back in 2014, and that federal law allowed for this, or allowed for the states to open and launch their own programs. And as I mentioned, these accounts specifically allow for that tax-free savings for certain qualified individuals with disabilities to save for qualified disability expenses and not risk losing public benefits. You might hear Able accounts being referred to as 529As. That is just the section of the Internal Revenue Code under which Able was allowed for. So they were actually, Able accounts were actually allowed for or modeled off of 529 college savings programs. It was a group of parents that just got around the kitchen table and were frustrated that they could not save for their children with disabilities in the same way that they could save for their children without disabilities. So they could save all this money for their children without disabilities, for college, for their future, what have you. And the story was so often told that they had to, or it was recommended to disinherit, quote unquote, your children, because if you leave them any money in their name or save any money in their name, it would impact their eligibility for vital means-tested benefits and programs. So they got together around their kitchen table, as so many of these significant laws occur, or how they get started, and they started talking about how they could make this happen. And so obviously they did make it happen, and it was signed into law in 2014. So INvestABLE Indiana, once that federal law was passed, we looked at different ways to launch our program, and we decided to join what's called the National Able Alliance, which is just an economies of scale approach to offering a program that's unique and specific to the state of Indiana. But it also, in taking that economies of scale approach, it allows us to offer a user-friendly, inexpensive product with easy to understand investments, because we wanted to allow a population that has historically been unable to save and specifically even invest, to be able to either, as you'll see, save in a cash-based checking option or save in the market with relatively low risk. So we launched our program at the end of July in 2017. We're growing, we're approaching about 2,000 accounts at this point. Our account owners on average are saving upwards of almost $10,000 at this point, which is a far cry from only saving $2,000 to either one's own name or their loved one's name. And so more and more people, as they learn about InvestABLE, are excited to to enroll and reap sort of the benefits of having an ABLE account. So I mentioned there is eligibility criteria that must be met to have an ABLE account. And so the eligible individual is the account owner. And I will expand on like the types of authorized individuals. And it's actually laid out at the bottom of this slide. But there are types of authorized individuals that can open and manage an account for an eligible individual / account owner. If either the person is unable to do so themselves, unwilling to do so themselves, or just is like a minor at this point. So the eligibility criteria presently is that the individual must have experienced the disability onset before the age of 26. So for our friends in the autism community, our loved ones in the autism community, they would be eligible for an ABLE account. And then they must either be entitled to SSI or SSDI because of their blindness or disability, or can self-certify that they have a similarly severe disability if they're not receiving SSI or SSDI. Because a common misconception is that someone, A, must be a certain age to have an ABLE account or open an ABLE account, and B, must be receiving benefits to have an ABLE account. Then you do not have to have, do not need to be a certain age to have an account. You just need to meet that onset of eligibility criteria, and then you just need to be able to self-certify or meet either of those two criteria. And then, yeah, I kind of lost my train of thought there. I'm sorry.
No, I have a quick question.
Yeah, go ahead.
Getting your train of thought back. So am I
Yeah.
reading that correctly? That's age 26 is going to change in 2026 to 46 years old?
Got it. We're so excited. The ABLE age adjustment just recently passed. And so more and more people, so we have, yes. So the age of onset is increasing from 26 to 46 years old on January 1st, 2026.
That's
So
amazing.
we're very excited that
Wow.
more individuals will be ABLE eligible, because, you can incur a disability at any stage of life, and it will help get this important and impactful program into people's hands. So yeah, they just have to meet that age of onset criteria, either be entitled to SSI, SSDI, or be able to self-certify that they have a similarly severe disability. And then, as I mentioned, an eligible individual can either open the account on their own, or an authorized individual can open an account on their behalf. And the types of individuals that can be authorized individuals are actually listed, specified as a hierarchy. So first, that has the first type of authorized individual that has priority to an account would be a power of attorney. If there is none available or willing to do so, then the next step down the hierarchy would be a guardian, then a spouse, a parent, a sibling, a grandparent, or even a Social Security representative payee can act as an authorized individual on an ABLE account. So under self-certification, because as I mentioned, as long as they meet that age of onset criteria, if they're not entitled to either SSI or SSDI, they can self-certify. And so self-certification simply looks like them self-attesting to either having blindness as defined by the Social Security Act, or another medically significant physical or mental impairment with marked and severe function limitation that has lasted or expected to last at least 1 year, or result in the individual's death. And then they just need to have this written disability diagnosis in their possession upon the time of enrollment, and signed by a physician. We do not collect that disability diagnosis. We just ask you to self-certify. Click a radio button that says either myself or my loved one has this written disability related diagnosis. And then we ask that you just maintain that in your records in case the IRS or the Social Security Administration wants to verify your ABLE eligibility. So we as a plan do not require that you jump through any hoops essentially to maintain that eligibility verification. We do send an end of year statement for the account that contains messaging in it that says, by continuing to have open your INvestABLE Indiana account, you're attesting to continued eligibility for the program. So it's just pretty straightforward. So qualified disability expenses are where I get the bulk of my questions. And so while this list in front of you, it contains a lot of different areas for expenses, I should say. very broad expenses, or categories, that's the word. I always tell people that the best sort of way to define a qualified expense from an ABLE account is that the expense must somehow benefit the individual as it relates to their disability and can improve their health, independence, or quality of life. So that is very, very broad. So, you meet one individual, or one individual with a specific diagnosis, let's say autism. You've met one person with autism or with whatever disability, that diagnosis that might be. No two individuals are the same in terms of their needs, in terms of their life expenses, in terms of their resources, etc. So what someone might be using, one individual might be using their ABLE account for, another individual might be using it for in a completely different way. Basic living expenses are qualified, so clothing, food, personal hygiene products. Educational expenses are qualified, health and wellness expenses. We do see account owners who are using their INvestABLE accounts to save and pay for home health equipment. So like maybe a treadmill or gym equipment, that sort of thing, or a gym membership. Maybe they want to use their INvestABLE account to pay for a Y membership or another health and wellness facility in their area. Housing expenses are qualified. So if that's rent, mortgage payment, utilities, trash removal, that sort of thing, those are all considered qualified. Recently had a question as to whether or not HOA fees are considered qualified, and I guess as a qualified expense. And I guess the Social Security Administration has taken the position that they don't consider HOA fees qualified unless as part of that fee is some sort of housing related expense, such as trash removal within that HOA. So, but other like taxes and property taxes and those types of expenses related to home ownership or renting, those would be considered qualified. Transportation costs are a big one because so often those aren't covered for many individuals. Legal fees, financial management. You'll see that this is a true savings and investment product. So for a population that has historically been unable to invest in market-based products, or is just not sure how to and where to invest their money within the program, they could go to a financial advisor and get some guidance on their INvestABLE expenses, and they could use the funds in their INvestABLE account to pay for that expense. Employment training and support. So if an individual is receiving, in this score, I kind of like to point out, so ABLE accounts are intended to supplement and not take the place of other means tested benefits that an individual might already be receiving. So let's say if someone is receiving vocational rehabilitation services to help them find a job or gain accessibility within the workforce or whatever they're using VR services for, they can absolutely use that VR benefit to pay for whatever they need. But if there's something that VR is not paying for, then they can tap into their INvestABLE account to help cover those housing or those employment training and support expenses. If they're not, utilizing vocational rehabilitation services, then the INvestABLE account can absolutely be used to help pay for, whether it be non-slip shoes because they're working in food service in a restaurant or in food services, or they need to pay for a uniform or other employment related expenses. It absolutely can be used to help pay for those things. Other assistive technology, adaptive equipment, personal support services, whatever that might look like for that individual. If it's home health aide or someone coming into the home to help support them, or if they're going on a vacation and they need someone to travel with them to help them in their travels, they can do that. Other types of oversight and monitoring, and even funeral and burial expenses are considered qualified. So I do get a lot of questions kind of tying back into the idea on travel expenses as to whether or not those expenses are considered qualified for an ABLE account. So I will say I'm not allowed to give tax or legal advice as it relates to qualified disability expenses. I can say that I do work with a lot of professionals in the disability services industry, such as special needs planners, special needs financial planners, or even attorneys. And they will say it's really difficult to pay for a vacation if you're limited to $2,000 to your name. So absolutely, an InvestABLE account can step in and pay for those travel-related expenses. And I'll even point out on the list that housing and transportation costs are considered qualified. Those travel costs will incur typically housing or some sort of shelter, which is a basic need, and then transportation fees. So we have an InvestABLE account owner who is really using his account to pay for. So he has a special needs trust and he has an InvestABLE account. And he, with the help of his father, opened his InvestABLE account to help him save for travel specific expenses because his mom lives in Canada and he wants to save up for a plane ticket, maybe to go see his mom in Canada or achieve dreams of traveling worldwide that he otherwise would not be able to save for. We do encourage folks to keep track of their expenses. Maybe it would just look like a basic check log of the date of the withdrawal, the amount, and what it was used for in case the Social Security Administration or the IRS were to audit the account. But one of the unique features about ABLE accounts is that you, as either the authorized individual or if it's you or your loved one managing the InvestABLE account on their own, that person has direct access to and control over their own money. And they don't have to go through that third party, for example, a trustee within a trust to get approval for or access to their money. We do see, with that being said, we do see a lot of account owners who have the resources and the ability to have both a special needs trust and an InvestABLE account together, that they will do so. And if some trusts are set up that they allow for a regular transfer of funds from the trust to the InvestABLE account to allow that individual to have increased autonomy and financial independence. So one example I like to share is that an estate planning attorney that I work with quite often has set up her clients in trust to, on a monthly basis, transfer a certain amount of funds into his InvestABLE account so he can pay for his own cell phone bill, so he can feel a little more independent, like he's paying for his own needs. And that's really important, as you know, for that independence to be achieved to the greatest extent that is possible for that individual. So the special tax advantages with an InvestABLE account are that all ABLE savings grow and are withdrawn tax-free, again, as long as the savings are used for those qualified disability-related expenses. If the savings portion is determined by the IRS to have been used for a non-qualified expense, then the earnings portion of the withdrawal will be treated as income. So that's important to keep in mind if they are receiving benefits that limit them to their income. And then also it would be taxed, the savings portion of the withdrawal would also be taxed at the account owner's tax rate and subject to a 10% federal tax penalty and any applicable state taxes. So essentially they're going to have to pay taxes on any earnings portion of the withdrawal because post-tax dollars on the account. So those dollars you've already been taxed on, and then those funds can grow and be withdrawn tax-free as long as they're used for those qualified expenses. The retirement savings contributions credit is also known as the Savers Credit, is a federal credit that is available to certain lower income earners who are working and not participating in an employer-sponsored retirement program or other type of retirement mechanism, but are instead contributing into their ABLE account, that they might be eligible for that Savers Credit. So I just encourage folks to speak with a tax professional regarding their eligibility for that, potential eligibility for that. And then I'm very excited to share with you all that starting this taxable year, 2024, the state of Indiana will offer a state tax credit of 20% of the total contributions into the account, worth up to $500. So this state tax credit is available to any Indiana taxpayer who is contributing into their or their loved one's InvestABLE account. So it could be parents, grandparents, family members, friends, aunts, uncles, even the individual themselves, if they're the eligible individual themselves, if they're working and have a are a state taxpayer, all those contributing sources would be eligible for that state tax credit of 20% worth of total contributions worth up to $500. So in terms of any impact on benefits of ABLE accounts, I'm going to specifically say the 100,000, there's a $100,000 account balance, aggregate account balance limit for individuals who are receiving supplemental security income or SSI. If an SSI recipient has their ABLE balance go over $100,000, their monthly cash benefit from SSI is going to be temporarily suspended until their ABLE balance drops under $100,000. They do not lose eligibility for SSI if their account exceeds that $100,000 limit. They just temporarily lose that monthly cash benefit. Once their ABLE balance drops below $100,000, that monthly cash benefit would be automatically reinstated. They do maintain Medicaid eligibility regardless of that account balance of $100,000. So the possibility of Medicaid recapture after death of an account owner is not imminent and can only happen after, potentially happen, I will say, after all outstanding qualified disability related expenses are paid for from the account. So if our account owner passes away, whoever's managing their post-death needs, be it a state or whatever the circumstances are, then they contact the plan and say, my loved one has passed away, give us the information, and we will ask them on that call, are there any outstanding qualified expenses from the account? They will say yes or no, or we're still waiting to see. If there are outstanding qualified expenses from the account to be paid for, those have to be paid for from the account first. Medicaid doesn't get the first slice of the ABLE pie. Medicaid in Indiana has taken the position they will not actively seek recapture of from ABLE accounts unless the federal government requires them to do so. And those certain limited circumstances that the federal government requires them to recapture from ABLE accounts are when the individual is age 55 or older or was receiving certain types of Medicaid that provide long-term services and supports. Additionally, Medicaid cannot recapture for the lifetime of the individual from the ABLE account. They can only look at the window of time that both Medicaid and the ABLE account were open. So I always like to emphasize that Medicaid recapture from the ABLE account is not imminent. They don't get Medicaid doesn't get that first slice of the pie, and the ABLE funds can be accessed after the death of the individual to pay for those qualified needs. I think that key part might differ because I'm not a trust expert, but I do believe that certain trusts limit the ability or might even restrict the ability to access the trust after the account owner has passed away. Think that's, I have to mention on that. I will say that we've had, a couple dozen account owners pass away and Medicaid has not recaptured in all of the cases, maybe three accounts that they've recaptured from, it's not been very many. So the account owner for the ABLE account, ABLE eligible individual is the account owner, as I mentioned. There is only one account allowed per owner, but anyone can contribute safely and securely into their INvestABLE account. So with our program in Indiana, we have what's called the UGift option, and it is a safe and secure online gifting platform that allows for third-party contributions to be given into their loved one's INvestABLE account. So if you have holiday, special occasion, graduation coming up, and the individual, has an INvestABLE account and is therefore, potentially worried about going over any resource limit or just even saving for their future, then their family members, friends, and loved ones can safely and securely contribute into their INvestABLE account to help support them for their current or future needs. There is an $18,000 annual account contribution limit that an individual cannot go over. And that $18,000 limit does increase periodically to account for inflation. And then all contributing sources cannot go over that $18,000. So if the individual, for example, has an inheritance or a settlement that might be over that amount, then they might need to look at other savings mechanisms such as a special needs trust. And that is one way we see INvestABLE accounts and special needs trusts being used together quite frequently. I'm going to jump ahead a couple bullet points on the slide to the working account owners bullet point that allows working individuals who have an income and are not participating in another type of retirement mechanism, such as an employer-sponsored retirement program, to contribute amounts above and beyond that $18,000 limit. So it's just an added incentive for individuals who have a little more income or who have income to be able to contribute additional amounts into their ABLE account up to the federal poverty level. And so the additional amount that they could contribute under what's kind of called able to work within the industry is either the lesser of the account owner's annual gross income or the federal poverty level. I mentioned, so let me summarize a little bit. I mentioned there's the $18,000 annual contribution limit. For SSI beneficiaries, there is a $100,000 aggregate savings limit. For non-SSI beneficiaries, they can save up to $450,000 within INvestABLE Indiana. So again, if someone's not on SSI benefits, they could save up to $450,000 in their account. Of course, it's going to take some time to get up to either of those maximum savings limits because of the annual contribution limit. And then I do get a lot of questions, and we are seeing more and more authorized individuals and account owners rolling over funds from their or their loved ones' 529 college savings account into their ABLE account because it is allowable. Just contact the plan and let us know you're looking to do a 529 rollover into ABLE, and we can help you get that process started. The rollover cannot go over that annual contribution limit, which is presently $18,000. And I do always encourage folks to check with a tax advisor regarding any potential recapture from any state tax incentives, whether it be a credit or deduction from the 529 program that they're rolling over from. So as I mentioned, this is an investment and savings product, and we understand that investing can be confusing. We have tried to make it as easy and user-friendly as possible. We offer 6 investment options that range from more aggressive options to more conservative options. So I always tell people to kind of sit and think, how do they want their account to work for them? What are they looking to save for? Is it a more long-term savings? Maybe somewhere in the middle, or more short-term? Do they want it to be a little more transactional? So we've tried to offer investment options for every type of saver and investor. We even have a 7th option that is a checking account product that allows for the more even free and open access to their money. And so this slide just gives a high-level overview of what our savings and investment product or options within the program look like. You can see in the more moderately conservative and conservative options, there is a cash-based component to that portfolio. So these portfolios are a preset. They're a preset, and you would choose in the enrollment process. Maybe I want to put 50% into the growth option and maybe 50% into the checking option, or wherever you would find it best meets yours or your loved one's needs. And that checking option is 100% cash-based and FDIC insured. We partner with Fifth Third Bank to offer that option. With that being said, you do not go to any brick and mortar location, such as a bank, to even a Fifth Third Bank, to open your INvestABLE account or your loved one's INvestABLE account. You go through our website, in.savewithable.com, and I will give that website again here in a few minutes, to open the account. And then in the enrollment process, you'll get a breakdown of all these 7 options, and you will allocate by percentage where you want your funds to be placed. And so these are all mixture of mutual funds and ETFs. So they're relatively low risk investing, but still allowing for the opportunity and potential for growth on their savings. The federal government does limit allocation changes amongst those investment options to 2 times per year. But you can make those reallocations simply. You can't move money. We've tried to simplify that by offering systematic exchanges, so regular or easy, preset exchanges. You cannot move money freely from the investment options to the checking account without the systematic exchanges. But a withdrawal can be taken from any of the investment and savings options within our program at any time. So again, direct access and control to the funds. There's no limit to the number of withdrawals, and you can access the account either online or by phone. So if you want to just give us a call and say you want to make a withdrawal, we can remit a check to you. You can even link a personal checking or savings account to the INvestABLE account to easily transfer funds between the two. And then there's no minimum number of contributions per year either. And
So we have a question.
Yeah.
Does the checking account option follow the qualified disability expenses as well, or can they use money for any expenses such as entertainment?
So qualified expenses would be considered qualified, like it's, the definition encompasses whatever you're spending the money from any of the options. So yes, I guess would be the answer. The checking option is just an easier route or mechanism to access the money. You can get a debit card with that option. You can write checks from the checking option. It's still the withdrawals from the checking option still have to meet that qualified disability expense criteria. Entertainment expenses, we do see account owners using their INvestABLE funds to pay for entertainment expenses because the money they have in their non-able accounts has to be used for specific things because maybe it's, an SSI payment. And it's hard to save for certain things. But we do see account owners using their able accounts, taking their debit card to the grocery store, or the grocery store is not really entertainment, but to the movies, to go have dinner with friends, because that is improving their well-being and their quality of life. So that's why I always tell folks, does it improve the individual's health, independence, or quality of life? We've had account owners use their accounts to pay for gaming systems because this particular individual on the spectrum interacts with his peers, with individuals by gaming, by talking online through his Xbox. So absolutely. My kids would probably say Robux. I'd like to spend it on Robux. But you can open an account with as little as $25. I always tell people $25 in 20 minutes max can get the account open. We very excitedly, I'm happy to share that we just reduced our annual asset-based fees down to 0.28 to ranging from 0.28 to 0.31%. And then the account maintenance fee is either $58 per year or $33 per year, depending on how statements are received. So if you can get statements emailed to you, then you'll receive that reduced discount or that reduced fee for the account maintenance fee. And you can opt in to that emailing of statements and notifications in the enrollment process to automatically be enrolled in that e-delivery. The checking option is $2 per month if utilizing that option, but that can also easily be waived if you maintain an average daily balance of over $250 or receive electronic statements through the checking option with Fifth Third Bank. So it'll be two separate elections. If you're utilizing the checking option, they'll give you a second prompt if you want to enroll in electronic statement delivery with a checking option. So our website again is in.savewithable.com. It's really straightforward. We just recently revamped our online enrollment process and we've tried to make it even easier. We always encourage folks to read the program disclosure statement, or at least be aware that it's there and easily readable. We've tried to make it even more, we're getting ready to rewrite the whole thing and make it even more plain language, but we've tried to be very cognizant of keeping it in plain language. But take a look at the program disclosure statement. It goes, if you'd like, or you can give us a call, we could talk to you about it. It's there for you as a resource. And then in the enrollment process, like the first question that you're going to be asked is who is opening this account? Is it the eligible individual or is it an authorized individual? So for both types of individuals, if there isn't, of course, the account owner, you're going to have to put certain personal identifying information in there, such as a street address, social security number, or taxpayer ID number, birth date. And then you can even link a personal checking or bank account account to the INvestABLE account to allow for the easier to pre-schedule contributions and easier transfer of funds between the two accounts. But if there's an authorized individual, you have to enter certain identifying information for yourself or for them as well. You'll be asked other questions like how is the individual eligible? Are they receiving SSI, SSTI? Are they self-certifying? You'll be asked how you want to allocate the contributions into those different savings and investment options. We do see a lot of people that use the checking option in some capacity just because it is a safest, quote unquote, to a lot of individuals, and just kind of the easiest mechanism for them to park their money. But a lot of individuals actually do allocate funds into the other options as well, just for the potential for growth on their investments. I think I've covered most of this.
So we have another question online.
Yeah.
For those who work with ABLE account, is there any downside to having a paycheck directly deposited into an ABLE account?
Not that I can think of. We do see a lot of people that will do that. Maybe they want to put 50% in their INvestABLE account, direct deposited. They want to put the other 50% in their personal checking option, checking or savings option. The only thing I tell people to keep in mind is that the IRS and the Social Security Administration could audit your INvestABLE account, your ABLE account in general, and determine if funds are used for qualified versus non-qualified expenses. If you're going to be using your funds for those qualified expenses, then you can absolutely direct deposit your earnings or a portion of your earnings into the INvestABLE account. We have the payroll deduction form available on our website under the Forms tab or Forms link. So you can absolutely do that. You can even direct deposit Social Security funds, SSI funds, into the ABLE account. The only thing, caveat that the Social Security Administration has implemented or imposed with that is that the rep payee for the SSI funds must be the authorized individual on the ABLE account. So if you have a Social Security represented payee who is different from the authorized individual, because as you remember on that hierarchy, rep payees are on the bottom of the hierarchy. But if the individual has a guardian, and let's say maybe a group home or a residential facility is the rep payee for that individual, that guardian has priority to open, or even a sibling would have priority to open and manage the ABLE account. So the rep payee does have to be a signatory on the ABLE account for authorized individuals. If the only kind of circumstance where I've been posed with is if, what if that authorized individual higher on the hierarchy is not willing or able to open and manage their ABLE account, then the representative payee could do so on their behalf. But if at some point, older brother or younger sister comes around and is like, hey, I'm going to open an ABLE account, I'm going to take control over this, then we would have to freeze the account, and that would have to be resolved between those two types of authorized individuals. But yeah, it's not to go down too much of a rabbit hole, but these are just some of the questions that I've been posed with before. But as I said, $25, 20 minutes can get the account up and running. You can actually technically open an account with nothing, with $0. You just have to fund it within 90 days. With, again, as little as $25 to make sure it doesn't get closed automatically. It's just a safety mechanism, a security mechanism that we have on accounts, that we don't want all these accounts opened with, being not funded. It reduces the risk of fraud and that sort of thing, since this is a financial product. Again, you'll have to verify who is opening the account. Is it the eligible individual or an authorized individual? The only type of authorized individual that we are going to ask for documentation on would be a power of attorney. We don't collect guardianship paperwork or anything like that. And then you'll just choose from the different investment options to save for you or your loved one. And then I always encourage people to utilize that YouGift feature and encourage family and friends to help support their loved one in living with their disability. And I think this is just important legal information that I have to at least show you, stating that I'm not qualified to give tax or legal advice. This material is provided for general and educational purposes only. And this material is all present as of today. If fees get reduced or other changes within ABLE, whether it be on a state or federal level, it's subject to change. So this is just a list of some frequently asked questions that sometimes pop up. I do try to touch on them within my presentations. That last bullet point of whether or not there's a residency requirement for INvestABLE Indiana, there is not. So if you presently live in the state and you move out of state, you can keep your account here in INvestABLE. If we do see individuals who maybe the authorized individual lives in the state and the account owner lives out of state, or vice versa, you can still open the account within the state of Indiana. I always encourage folks to check their home state's program, because there might be that state or state level tax incentive, such as the credit that Indiana offers INvestABLE savers. So last slide, our website, in.savewithable.com. Make sure you go to the INvestABLE Indiana website, because sometimes if you Google Indiana ABLE account, it might send you to another sponsored link for another state's program. We have had individuals inadvertently enroll in another state's program because those states, are sponsoring that Google link or that search link to their program. So just make sure you're on the INvestABLE website. There's a lot of information there. There's some videos, there's some resources available. You can request more information, give us a call. 888-609-3457, or give us an email as well.
Amy, thank you so much.
You're welcome. Are there any other questions that popped into anyone's mind? Or if you have any questions, please don't hesitate to reach out to me. I'll go ahead and share my email in the chat real quick.
And then you can go ahead and send me the slides, and then I can email them out to everybody along with the recording of this.
Perfect. I can do that.
Perfect. Any other questions for Amy about the ABLE accounts? It answers some of my questions. I think we're finally getting closer and ready to open an account for my youngest daughter. So I always have questions between the ABLE account and the trust and how they kind of work hand in hand. So that kind of answered some of my questions for that. Another question I do have, if grandparents live out of state, are they able to put money into the account?
Absolutely. They wouldn't, of course, be eligible for the state tax credit because they're not state taxpayers. But yes,
Right.
absolutely. In state, out of country, they can go through UGIFT and safely and securely contribute. I will mention one difference between ABLE accounts and special needs trusts are that if an individual uses money from a special needs trust to pay for housing related expenses and they are receiving SSI benefits, it will result in a direct reduction to their SSI benefit. If they use money from an ABLE account to pay for housing expenses, it will not impact their SSI benefit. So that's a fun and important fact.
Yes, that's very interesting. Yeah, my youngest, she's 14 now. So we're getting closer and closer to that, transition 18, stage. So we're just starting to get prepared and moving forward with her. So
yeah, it's never too early to start saving. And that just reminded me of what I forgot a while back. An individual does not have to wait to the age of 18. If their parents want to go ahead and open it at the age of 2 and start saving, you can open it as long as they meet that eligibility criteria. They don't have to be the age of 26. They don't have to be an adult, a legal adult. When the account owner, if they were a minor, when the parents opened up the account and when they're approaching that age of majority, which is 18, we will communicate with them and the authorized individual as to how the account is going to be managed.
okay, that's good to know.
Becomes an adult, yeah.
So it'll be my husband and I would be, authorized under her name. Okay.
Yep, absolutely. Yep. And then when she, right before she turns 18, we'll send you a letter and say, hey, reach out to us and let us know how you want the account managed once she reaches the age of 18.
Okay. Any other questions while Amy's still with us? Obviously, you have her contact information. I'll put her email in Amy's email and email I'll be sending out tomorrow with all this information. Again, thank you for everyone who's on today. We really appreciate your time. Wanting to know more about this information. Amy, again, thank you so much for coming on today and talking to us about the ABLE accounts.
You're welcome. Thank you for having me, and thank you all for being here.
Thank you.
All right, bye.